Hello and welcome to Business Now. I'm Malcolm Sime, and as the year draws to a close, we wish you and your loved ones happy holidays and a very Merry Christmas. And tonight we bring you conversations that are shaping Uganda's economic future. We speak with Her Excellency Lisa Chesney, the MBE, the British High Commissioner to Uganda, on deepening UK-Uganda trade ties, investment flows, and investor confidence as bilateral relations continue to strengthen. We also examine a decade of progress in financial inclusion, unpacking how policy, innovation, and collaboration have brought millions into the formal financial system, with insights from financial sector deepening Uganda. And in energy sector, we sit down with Engineer Mwesigwa Paul, the Managing Director of the Uganda Electricity Generation Company Limited, to discuss how power generation, major hydropower projects, and how Uganda is really preparing itself to meet rising electricity demand and drive economic growth. So those stories and more right here on Business Now. Stay with us. This is Business Now. Let us first have a look at the top global business stories and how those stories could affect markets in Africa. A raft of US data due on December 23rd, including final Q3 GDP, core PCE inflation, and consumer confidence, will test views on the economy's resilience there and the Federal Reserve's policy path. Strong ratings could reinforce expectations of fewer rate cuts in 2026, while weaker data may revive recession fears, shaping global risk sentiment and the US dollar. And the African impact, according to our experts, we could see a stronger US economy, and that this could support demand for African commodities. But a firmer dollar may also pressure currencies, capital inflows, and dollar-denominated debt. Weaker US data could trigger risk of moves weighing in on African assets. Year-end assessments will focus on rising protectionism following new US tariffs. Even as global trade grew in 2025, analysts are weighing supply chain shifts, climate-linked trade policies, and the outlook of 2026 amid higher debt and shipping costs. But how will that impact African markets? Tariff uncertainty has hurt African bonds and equities and could strain exports to key markets further, though opportunities are emerging through South Africa trade and stronger intra-African commerce. Now tonight on Business Now, we speak with Her Excellency Lisa Chesney, MBE, the British High Commissioner to Uganda since assuming her role in late 2024. The High Commissioner has been active in strengthening UK-Uganda economic and diplomatic ties, from promoting trade and investment opportunities to supporting innovation and sustainability partnerships. I sat down with Lisa Chesney at her residence. Your Excellency Lisa Chesney, you're welcome, the British Ambassador to Uganda.
Thank you so much, Malcolm.
Yes, and you're welcome to Business Now.
Thank you, I'm excited to be here.
Great. Okay, so let's talk about the state of UK-Uganda trade relations.
Trade relations are strong, and the position is going upwards. And if I look back, as you say, this is a journey we've been on for a while. If I look back over the last 5 years or so, actually our bilateral trade has gone up by 42% as well. So it's going in a good direction.
What I remember most about, most recently, even at previous trade forums and summits in the UK, either during Prime Minister Boris Johnson's time and back home when we came here, there's emphasis on green investment, emphasis on green growth,
Well, that's a really good area to focus on, because I think wherever you sit in the globe, green transition is really important, right? And I think when I look at British investment, it's really powering Uganda's green transition. If I look across the portfolio, investment is going towards lighting homes, supporting clean cooking, irrigating farms, helping traders get to market in a way that's clean. So the types of things that we have underway at the minute, let's start with perhaps Kalingala infrastructure services. That investment was all about connecting remote communities to the mainland. If I think in the farming sector, I look at what Nexus Green is doing with UK export finance. I think we're now up to over 700 different solar irrigation systems out there. That's making a difference to 2.6 million Ugandans and really boosting productivity and harvests.
So let's just talk about the markets in the UK. And you spoke about coffee. There's a lot that is going into the UK market from this country, fruits, I think fish. We also have other markets. The UK market has been very, very important. What opportunities are there currently? What other things can we do best, to meet? Because I know EU has very stringent standards of recent.
We want to support that, particularly that SME sector. That's the backbone of the private sector here. And I would pick out sort of four main areas where we're trying to sort of encourage and support more of that trade, more of that access to UK market. First of all, it's around the financing. So one of the things that businesses tell me is they find it really hard to access credit. So we've got some really innovative work going on with a company called Aseli and the Uganda banks that's all about trying to make sure, say, agricultural businesses can access the credit that they need. And there's areas where we're working with larger businesses too. I think your point about standards is really key. What we were trying to do is make sure that the standards are clear and that exporters can really easily access what are the phytosanitary standards if you want to get your product to the UK. We've got something called the Growth Gateway, and we'll put the links in on my social media afterwards. But that Growth Gateway is effectively a portal where exporters can find out what are the standards, what are the certification needs, and how do they access them. We've got work with the Uganda Bureau of National Standards precisely on that space. So it's finance, it's standards, and I think access and connectivity would be the other areas where we are supporting.
Do you see progress? Do you see countries in this region really opening up to trading with each other? What hurdles are you hearing about?
So I think
you're ready to support.
You're absolutely right. I mean, it's not easy, is it? And it's actually not just the very sort of tangible trade barriers. There's lots of non-tariff barriers that get in the way, and as you say, protectionist tendencies, and that's not just in the region. I think that's across the globe right now. When I talk to British businesses and investors, I hope to get them excited about Uganda as a market, but I also tell them to think of Uganda as a gateway to a much bigger market too, whether that's the African Free Continental Trade Area, whether that's also the EAC as well, right? Because the EAC on your doorstep, 300 odd million consumers, the East African community, and over 300 billion in terms of GDP. So in terms of accessing any regional trade bloc or regional trade area, I think Uganda is doing the right things in getting policies clear, in understanding both tariff and non-tariff barriers. From our point of view, we're supporting on different dimensions of your trade policy, working really closely with the Ministry of Trade. And there's also something to think about in terms of connectivity. So we've talked a lot about infrastructure within Uganda and how UK export finance and other investment vehicles are helping unlock that. I think there's also something to think about in terms of connectivity cross-border. How do you facilitate even easier market access with your key trading partners? And we're in for all of that.
Ambassador, thank you very much for speaking to Business Now. We're looking forward to having you again.
You're very welcome.
Thank you
Thank you,
so much.
Malcolm.
Okay.
Thank you.
Now, over the past decade, the financial services sector has made great strides in financial inclusion, bringing millions into the formal banking system. But what has driven this transformation? And according to Joseph Lutwama, the Director of Research and Insights at the Financial Sector Deepening Uganda, the progress is the result of deliberate policy collaboration and sustained commitment at FSDU and in partnership with the Bank of Uganda and other development partners, has been at the forefront of initiatives expanding access to financial services across the country.
We've been able to work with government and different stakeholders within the financial system to establish a conducive and enabling environment for financial inclusion. That is reflected in a number of policies, laws, and regulations that have been enacted, passed, and established over the last decade. Of course, the one that really comes to mind is the financial inclusion strategy. That sort of sets the agenda for both government as well as the private sector. Of course, there have been also fundamental policy, legal, and regulatory frameworks that have been critical in providing that conducive environment to extend financial services to the last mile. The ones that come to mind is the policy and legal regulatory framework for the microfinance sector that also subsequently was able to establish a regulator for that sector. For a long time, that sector didn't have a regulator, and yet it serves the largest percentage of proportion of Ugandans in terms of financial services. The other one is the National Payment Systems Act, which paved way for a more robust legal and regulatory framework for digital financial services, driven by digital payments, which most people are more familiar with in terms of mobile money. For a long time, they were just simply guidelines that didn't provide enough confidence to different players as well as the general public. But now we have a more robust legal regulatory framework. So the other category is the infrastructure. Yes. We've seen the growth and development of infrastructure that has enabled the extension of financial services to the last mile. Most critical of those infrastructure is the cash in, cash out agency network that allows conversion of cash into mobile money and vice versa. That has brought services close to the market. Financial institutions are now being able to leverage that network to be able to extend other financial services like credit, savings, investments beyond mobile money. So today you're able to access not only typical P2P transfers through your mobile phone, but you're able to access credit, you're able to access savings, even insurance. So all those things have gone a long way in extending financial services to the last mile. Mobile money has been the game changer because traditionally financial services are provided through branches, brick and mortar branches. What that means is that essentially for financial services to get to an area, there had to be a business case for establishing a branch and all the cost structures that go in servicing that branch. Now, with mobile money, all those costs are no longer necessary because all those services are able to be delivered through the mobile phone, which a majority of Ugandans have. So that substantially brought down the cost of extending financial services to the last mile. For me, I think that has been the most foremost driver of financial inclusion in Uganda. So we need to see many more transactions happening, large retail transactions happening, and happening many more times. Now, for that to happen, you need functional markets. Yes. The Ugandans have to be empowered to create value economically, whether it's in agriculture, whether it's in trade. Yeah, and that's why to achieve sustainable financial inclusion, it will take more than banks developing and designing appropriate products, delivering those products efficiently, but we'll need an economically empowered customer, which will require non-financial actors like government, donors, and also private sector players to drive that economic activity, because that's what creates value, and that's a value that brings value to the economy and to the financial system. Active usage, we want to see more money moving through the accounts of Ugandans. To date, most of the accounts that have been accessed by Ugandans are dormant. There's hardly any transactions. And those that have transactions, they're intermittent, they're not regular. And even those that have transactions, they're not that much. So you find that the volume and velocity of money through these accounts is really very minimal to provide any meaningful impact to the account holders.
So tonight on Business Now, we also sit down with Paul Mwesigwa, the Managing Director of the Uganda Electricity Distribution Company. And he tells us what is happening in the power sector, distribution, demand and supply, and the challenges that businesses are facing. I sat down with him at the company's headquarters. Paul Mwesigwa is the Executive Director of the Uganda Electricity Distribution Company Limited. Talk to me about the transition. How has it been so far?
Thank you very much, Malcolm. Greetings to all the viewers. I'm Paul Mwesigwa, Managing Director UDCL. It is now 6 months since we took over the operation of Umeme on the 1st of April. And cumulatively, we've now taken over 7 private operators, including Umeme. We've done a lot. People have settled in. We are now chasing our key performance indicators, make sure that power is supplied, people can vent, materials are flowing, procurements are moving on. So in principle, we've also concluded our 3-year strategic plan, which we are now implementing to make the lives of the population better. So all the issues that were raised in February, March about the doomsday, I think have not happened. And I'm delighted that the country is managing the affairs very well.
Are you very sure right now that in this transition, you are doing the right things to make sure that industries, make sure that manufacturers that are working within those industries are happy?
Actually, thank you very much. Actually, among the fundamental decisions is to transfer the responsibility of power distribution to the government. Because electricity is among the backbone for the country, and it plays a fundamental role to the developments of other sectors, including influencing the macroeconomic variables. We've been positioned to pay our supplier 100%. The main supplier that we pay is UDCL. To date, they are not demanding us any outstanding invoice. That is actually a resurrection of the energy sector, because all the previous 7 companies were taken over. By the time we took them over, they had areas, including Umeme, they had areas of 600 billion.
You're doing very well.
So
tell me, are you planning to dedicate special lines to industries?
For your information, all the industrial parks in Uganda, at least the design is to have a dedicated line on the transmission side. Let me start with the number of industrial park. There is a transmission line that supplies within the number of industrial park, and on average, 80% of the factories, they have a dedicated line, at least. What we are looking at, that if you have one dedicated line, you could also have another alternative dedicated line, because if you are working on one line for repairs and maintenance, we should be switching it to another dedicated line. I can also give you another example. In Karamoja there are factories coming up, but I think they all have dedicated lines. What you need to appreciate, viewers, that power distribution is an infrastructure which is mainly involving civil works. In civil works, you need to scope, plan, procure, and execute. We have equipments whereby even if you pay now, the manufacturer and delivery can take them 6 months, whether you are government or a private operator. But in our plan, in the first 2 years, we expect that the network would have been stabilized to come out of the delay that was happening on the network, which took 3 years without having significant investment. What I can assure the business viewers that we've secured the funds, both within the tariff and even the lenders.
How much more investment is going to be put into the electricity infrastructure?
Minimum $70 million per annum. But we are looking at big blast, 100 to 190.
Thank you very much, Mr. Executive Director
Thank
Paul
you very
Mwesugwa, a man who is in the target of very many, and we wish you the best as you transit. And that's all we had for you for Business Now. Thank you for watching. As the year draws to a close, we wish you and your loved ones happy holidays and a very Merry Christmas.